Welcome to Investor in the Family Radio, a podcast about learning to invest. My name is Brian Bain, and I'm your host. At Investor in the Family Radio, we believe that every dollar and minute we spend is an investment in something. And together, we want to make the best investments that we can, so thank you so much for joining us. Dana Blankenhorn has been a tech journalist for 40 years and knows the industry very well. He recently wrote an article about how Apple surprised investors with their capital outlay and success in cloud computing. In this interview, we discuss why cloud matters and how Apple is winning at cloud. Remember, our goal is to help you learn to invest financially and in all of life. You can always find more at investorinthefamily.com. In less than 1 month, the second online investing conference will kick off. This conference is fully online and will feature 3 top growth-focused investors. Each will share their current 2 highest conviction investments. And all the picks and research they share will be content that is normally reserved for their premium subscriptions. And that would normally cost you access would normally cost hundreds, even thousands of dollars. But for a short time, you can get free access through this conference. Headlining the conference this fall is Brett Jensen and Cody Willard. And with another speaker to be announced soon, access to the conference is free for a limited time. Go to onlineinvestingconference.com to sign up or text the word join family, together one word, to the number 44222, and we'll email you shortly with all the information you need in a few days. And I hope you enjoyed today's interview with Dana Blankenhorn. Well, hey, Dana, welcome to the show.
Good to be here.
Well, it's great to have you back on the show. We had a really good time a few weeks ago learning a lot about your background as an investor and what your thoughts are on a lot of things going on in the tech space. And then here we are just a few weeks later, and you recently wrote an article on what we got wrong with Apple. And I'd love to spend some time discussing that with you today.
Sure.
Do you mind? Yeah. Do you mind sharing some of what's the thesis of the article? Where are you coming from?
Well, over the last year or so, Apple has dramatically increased its capital budget. They have been spending billions and billions of dollars on capital goods. And with the sales of the iPhone supposedly slowing, I figured that would result in some pretty bad results. The results weren't really that great when you stop to look at them, but they were much better than people were expecting. And as a result, the stock is up about $10 a share since they came out. The main thing I got wrong was looking at that capital budget and saying, boy, how are they going to get that money out quickly? When you're buying a whole lot of cloud data centers. Then it turns out that they actually had enough demand for services that they can get that money out very quickly. That is the key to being a player in the cloud game. You have to have a lot of cash flow running through the cloud that can monetize the expense, that can pay off the loans or pay back the money. And Apple was just not known as a services company, but that services number that they put out, I think it was like $3 billion. They spent $12 billion in capital spending. They'll pay that thing off in 4 years of that, and it's growing. So that capital spend is no longer nearly the problem that we thought it was.
So how does that change the narrative for you regarding Apple at all?
Well, one thing it does is it guarantees that Apple really can be a cloud player. That is the great game today. In 2016, companies that have the cash and the income to play in the cloud are the companies that are really dominant, and there are just a very few of them. You can count them on one hand. Google gets it from search, Microsoft gets it from software, Amazon gets it from the store, Facebook gets it from mobile. And now we see that Apple actually does have the service revenue to get that money back out. That means they can keep on investing in cloud. And that means they can keep on expanding their capacity, building out what really amounts to a global network of cloud data centers. And once you've got that kind of global network, then you've got the kind of redundancy that the internet itself has. You're no longer dependent on one center, continuing to work. Back about 4.5 years ago, Amazon really got hit hard because they were very dependent on a data center in Northern Virginia. And when that thing went out, Netflix went down all over Florida on Christmas Eve. That was bad. It's 4 years later. They've been spending continuously since then, and that's no longer a problem. It's not a question of just building out a data center and now I'm a cloud. The capital spend required to be a player is ginormous. You have to build out cloud centers that are scaled in multiple geographies. You have to have enough, fiber throughput between those cloud centers so that they really can move, their data back and forth quite quickly. And so if somebody goes down, you've got its back. And then you never do go down. Then you are the internet.
So in our last interview, you talked a lot about current big trends in tech and then the next trend and then the next trend. And right now you said, but the big thing is cloud computing. From a consumer standpoint, hear that and you think, well, that's an option for storing data somewhere that Apple sells me on my iPhone. Or, you think of it on kind of almost rudimentary things like that. It allows my MacBook to sync with my phone and stuff. But from a purely consumer standpoint, that sounds kind of boring and not like that big of a deal. Obviously, these big tech players see that very differently. Can you help us understand why it matters so much? Is it simply what you just said? It helps back things up so they can constantly be available, or is there more to it?
More and more of the heavy lifting in computing is going to the cloud. Less and less of it is being done at the edge, at your edge, by your device. PCs are disappearing, and things like them are becoming less power relative to what's at the center. So if you're going to be a player, you have to be there. You have to be in the center. You have to have that capacity to handle that traffic. Now, at some point in the future, there is going to be another shakeout. There always is. And a lot of players have already gotten shaken out of the cloud and therefore shaken out of the technology mainstream. Companies like Verizon, which is now in the process of closing data centers. Companies like Hewlett-Packard, which found that the money that was it just cost too much, and they couldn't play. And once you fall off, you become a niche player. You become a lot less interesting to investors. I'm interested to know how much of this capacity is actually being used at any particular time. It's very contingent capacity. Sometimes there's a rush to the rail when things happen. And then at other times, it's not being used. You can get some hints if you're a really heavy business user of cloud in tracking the prices that are being charged for services at off hours. But it's very opaque. It's still very opaque.
So basically, this isn't necessarily a shift for Apple away from hardware like iPhone, watch, things like that. This is really a necessity for those products, it sounds like.
Yep. That's it. That's it exactly.
Yeah.
It's a necessity for those products. And every industry and everybody's having to try and adapt to what these clouds are capable of. And as I think I said before, my business, journalism, is having one of the worst times because you cannot get a premium price for a premium audience anymore. You can just go to Google and just buy that premium audience, however you want to define it, and pay run-of-network prices for it. So where's the advertising going to come to support any kind of journalism effort? All the big journalism companies are circling the drain as a result. CNN, Time Warner, the Time actually had a good quarter, but it wasn't because of CNN, that's for sure. They're suffering just like everybody else. And, their guy was complaining about BuzzFeed today? Well, BuzzFeed's chasing the mass market. That's kind of what a lot of publishers have found they have to do. They can't go for the class market because you can't get the money out. And these sorts of changes happen in what seems like a minute across many industries. And once somebody figures out how to replace that industry, it's a world of hurt.
And so how is that tying in the cloud? I'm sorry.
Well, the cloud and Google and Facebook and these companies make it possible to buy a class audience for running network prices. So nobody has to go with and do business with somebody who's paying big money to create a class audience.
Right. And then
class audiences don't matter.
Yeah. And because from a consumer standpoint, we're not thinking that way. We're not seeing that. But basically, all the disruption we see happening by Google, by Facebook, and everyone else is happening because of cloud. So that's okay. Yeah. That makes sense. So, anything else stand out from the most recent earnings with Apple that you think anything notable?
Well, they really were not as great as you may think they were. They were a lot better than, in a way, than people thought, and so the stock went up. And they did prove that they can make money in services, which is absolutely vital. But the numbers, you compare the numbers that they generated, $42.358 billion in revenue. A year ago, they did 49.6. This company is actually not getting bigger right now. They do a bang up business at Christmas, and they did $75,872 million last Christmas. But they're not able to generate as much money quarter to quarter across the year as they were. So they really do need to get that iPhone 7. They really need to get Apple TV and things like that. They really need to get something going that's new and different.
Well, that's been the road.
This is not a stock that is yet worthy of even a market PE. There are some. I'm doing a story later this week on some of the bargains in the market. Apple is selling right now at 12.4 times earnings in a market where the average is like 18 or 19.
Isn't that crazy? Yeah.
Yeah, and before these earnings came out, they were selling at about I guess 11.5, and then you consider that the company's worth $560 billion, and it's got roughly $200 billion of cash sitting around still.
Right.
So you're talking at 361x cash. You're talking about a PE of 8 or something. There are some ridiculously low prices out there in the market. Airlines, car companies. You could buy GM for less than 4 times earnings and get a dividend that pays 5%. That's like an oil company dividend. And nobody wants it. Oh, they'd rather have Tesla.
Right.
Why? Well, Tesla's the
Gigafactory.
GM GM stock has done better than Tesla stock over the last year.
Take that back. Take that back, Dana. Don't say that.
That's true. It's true. Tesla stock has basically gone sideways, and GM stock has mostly gone sideways. But Tesla's gone sideways and down a little bit, and GM's just gone sideways. Plus, you get that nice fat dividend, and they're not going away. I was doing a piece today. Why is it that we're paying this much for Tesla when we know that even if it does everything it says it's going to do, it's going to be GM, and nobody wants GM.
That is maybe the best line about those companies that I've heard. Well played. And I've actually done a number of interviews recently where Tesla has been discussed. Shocking. And that is awesome. I love that.
I love Tesla. I love Elon.
Yeah. My father-in-law just bought one, and it's amazing.
Yeah, but I'm not going to invest in it right now.
Sure. Right.
Not when there are other things on the board that I can get. Not when they haven't proven yet that they can really scale production. Why do you think Elon's sleeping in the factory? Because there's trouble in River City, and he had to hire a guy from Volkswagen. Excuse me, Audi is part of Volkswagen as his new production guy. I'd sleep in the factory too.
Well, tell me this. Back with Apple for a minute. You're right. The rub with Apple for a long time, for years, has been how can it get bigger? And when I don't think it's the biggest company right now, but it was, and it probably will be again. Who knows? But it's like, well, how can it grow meaningfully from that gigantic of a size? And obviously, people will argue very excitedly on either side of that. But it does beg the question, at some point, how do you keep growing? And who is there to keep buying? And what's next? Like, what do you feel like needs to be next for Apple in order for them to, I don't want to say please investors, because I hope that's never the goal, but really be able to see that growth that we think they're able to do. You mentioned iPhone 7, but new iPhones itself probably isn't quite enough. What do you think it's going to take?
Apple TV. It's going to take something in the home that competes with the Amazon Echo. It's going to take a car. They're going to do car software. They're not going to do a car.
Okay, I want to talk about that too. I want to talk about that too.
Okay.
Because I again was talking with someone recently about the idea of Apple doing a car, and it just feels like the whole TV thing to me, because there was so much excitement about Apple making a TV set or whatever they would do with TV, and it was going to be the iPhone of the TV world and disrupt it, and now it's like, well, it's still a hockey puck and no one really cares. And then now talking about doing a car, which seems like such an enormous leap in a whole different direction. Obviously, the tech is there, but manufacturing an automobile is just, that is insane, versus the tech for an automobile. That makes perfect sense. And it seems to me that I would not be surprised if, everyone's thinking about the Apple car when in reality, it'll probably more be the tech for the car. Is that what you think? Am I wrong? Am I crazy?
Yeah, that's what they're working on.
Okay.
I think we may be in the midst of a shift change in how change happens. For the last 40 years, change has generally happened through the private sector, through competition, through small companies becoming big companies, and with minimal government involvement. Before that, 40 years ago, if you went out and you wanted to bet on something techie, you'd be pointed to an IBM or an HP or an Intel. You'd be pointed to a big company, because a lot of the tech companies were highly dependent and directed by government money. Government money used to fight the Cold War, created the first computer, helped fund the development of integrated circuits, resulted in the internet. Once that was finally released to the private market. And so many of the things that are happening now, or that need to happen now, Internet of Things, a lot of the stuff that's happening in medicine and biotech, a lot of things, these things require a lot of cooperation. They're things that one company cannot necessarily make happen by itself. And they may be indeed things where you might want to look at the big companies that are driving these changes instead of the small ones now. You might actually want to look at GE. Yeah, I know. Sure. I know the advertisements are silly and you can't pick up the hammer, but but there are things that I've been studying, I've been following for well over a decade, that are now starting to enter the market, and it's becoming increasingly clear that if you're going to turn roads into a transportation system, you're going to have some standards. And you're going to have some cooperation. And that is not going to necessarily be a private good. It's going to be a public good. It's going to be like the roads themselves. And it's going to take that kind of effort. It's going to take people setting priorities and saying, we're going to do this. And, if we don't do that, if we don't set those priorities and start creating those kinds of public goods, we could lose our lead to China because that's what they're doing.
I like, I'm just thinking that through. I mean, obviously there's a lot there. And first of all, I like the idea of you talking about like an IBM and a GE actually becoming not cool again, because I don't think that's what it's about. But, behind the scenes, I mean, I'm not an expert on either one of those companies, but what I see happen, those have been great companies for a long time, and I don't think that's changed. I think maybe that they're not sexy and exciting right now, but that doesn't mean they don't have a lot of stuff in the works, and they may not become visible major players again in the future. And then, I mean, as far as what you're saying, so when you say like them being public works, basically the products being created again aren't consumables in your pocket, but they are infrastructure and things like that.
Well, consider what's been happening the last couple of years with the somewhat ballyhooed and lampooned cancer moonshot. The vice president has basically pushed companies to accept something like an open source framework for doing this work and a mission orientation that they didn't have before. And it's starting to get some results. This tells us that, open source itself means pooling resources because the job is too big for any one company to do themselves. Gotcha. You have to build off a rather high base, and that means a lot of people putting stuff into the pot, okay, and then taking out just what they need. You want to call that communist? I don't care what you call it, but open source as a development framework works, and we need that in medicine as well, and that's been proven now. And that has enormous implications for the future because a lot of the stuff that has to happen when we're talking about editing DNA, okay, are areas where public policy has to participate, where people have to find frameworks and agreements and get along if it's going to happen. There's a lot of floundering going on right now in the marketplace because we're finding limits on the size of the stack that you can build as a company, as an individual company. And we're finding more needs for cooperation. And that's one of the things that the government has traditionally done well. We beat the Soviet Union. I haven't heard about those guys in weeks and weeks. and you know what? It wasn't because of small companies. It was because of big companies and government involvement.
Well, that makes sense in the sense of when you have usually a greater common enemy is what links people, and that common enemy, maybe that's in the time frame.
Cancer.
Yeah, maybe it was the Soviets. Maybe now it's cancer. Maybe now it's something else. So I like that. I mean, I think there's, right now there's, actually, I think this ties in. Is you've got a lot of companies that are going after ideas for the quote unquote greater good, obviously with a very significant profit motivation, which is fine. Whether it be electric vehicles, autonomous vehicles, environmental, mostly new energy, renewable energy type stuff. And you have like this phrase actually just recently used, the era of the supervisionary. We've got these people who are working now for something that they hope will happen 30 years from now. And companies that may not be very viable for a very long time and hoping that in 30 years something will actually work out like they're expecting it to now. And then begging the question of, well, what if they're just wrong? Whether that be the gigafactor, which is not near that time of big of a time frame, but I think you get what I'm saying. Though. It's almost like people are trying to, there's this competition to outvision each other. You know what I mean?
Well, it is interesting. You mentioned energy because just as like in computer tech, we may be moving towards an area requiring more cooperation and perhaps even more government involvement in order to get big things done. In the energy field, we're actually kind of more in an Apple sort of space, because a lot of the things that are happening and a lot of the things that are necessary are things that relatively small companies can do. Solar panels and wind things and batteries, these things are incredibly disruptive. And they're things that individual companies can go out and make and put into the market. That used to be that you really needed enormous capital scale in order to be in the energy business. You had to be Exxon. You had to have billions and billions of dollars in order to do the work that you needed in order to scale up an energy system. You don't anymore. So, just as in some areas we're going towards more government involvement, I think in energy we're probably moving towards less.
Less what? I'm sorry.
It's good. Less government, less scale.
Oh, right.
There's still some things that we need to do in terms of standards and things like that. You don't want one guy to be doing 240 volts and one guy to be doing 360 volts. You need the same sorts of sizes of fittings and things like that in order to make it work. And I think that there is some work that can be done in solar in terms of standards.
It's really interesting.
For panel size, things like that.
Yeah, and what's interesting is, we just got finished talking about for greater good type things, we really need that companies and individuals, governments need to be able to work together to accomplish that. But disruption, it can be done by small companies. And that's a funny comparison I had not really thought about much before. Being a disruptor is not, it's difficult because obviously you have to have the idea and the execution, but it's much more accessible by people to be able to be a disruptor, but being able to accomplish a great work has to involve cooperation. That's interesting.
Yeah. But different industries go through different phases. There was a phase when energy needed that huge capital structure in order for anything to happen.
Right.
And the utility companies are fighting tooth and nail against what's happening in their space. They do not like the idea that people might own their own energy supply and want to resell some of it to you. And they do not like that one little bit. And yet that creates a much better and more resilient energy system with microgrids.
Sure. Much harder for it to go down.
Yeah, Al Gore 10 years ago talked about the Internet. He was energy network and the need for smarter grids. And the big companies, the utilities, are still stuck in this mindset of, I get paid for CapEx, I have to control the CapEx. When that's not really what the market's demanding. What the market is demanding is not more, but more reliable. So much of the energy demand now is computers. I listened to a guy with the energy department, Henry Gook, I think his name was, or something like that, about four years ago, and he was some lowly assistant secretary, and he had put in place some incentives for basically adding more storage in the system. And I think he said that we have an energy market, electricity market, of about $450 billion. But that every year, $150 billion is lost to blackouts and brownouts. Wow. This amount is increasing because computers require precise amounts of power. You can't get the big spikes that we're used to in the past. They can't live with that. That's why all of these cloud data centers have got their own energy supplies on site.
Right.
Even if they're taking power from the grid, they've got a whole lot of equipment out front that they own that's designed to make sure that the power going in is, as they call it, clean. But what they mean is the same all the time. That's why companies like Google are big markets for solar, because it means that the power that they need is right there. Right. They're already putting the money into storage. They're already putting the money into power conditioning systems. It makes perfect sense for them to know how much their power is going to cost 10 years from now, because they simply do what the utility used to do and run the CapEx model over a bunch of solar panels.
Huh. It's funny. So here we are in our conversation coming back to cloud. That's great.
Yeah.
Well, hey, Dana, this has been great. Thanks for spending a few minutes with us and helping us get a better understanding about what's going on with Apple in behind the scenes and with the cloud computing, as well as all the other dynamics of the conversation. Always insightful. Thanks so much for being on the show.
Take care.
Well, I hope you enjoyed today's interview with Dana Blankenhorn. Remember, you can get full show notes with links and other details at investorinthefamily.com. If you want to participate in the online investing conference for free, again, you can sign up for free for a limited time. Then the price is going to jump up to $100 or technically $99. And if you want to participate, go to onlineinvestingconference.com and sign up there. Or you can text the word Join Family, one word, Join Family, to the number 44222, and you'll get an email in the next few days with all the information you need to get signed up for that conference. This is Brian, and thanks for joining the family. The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.